Welcome, dear traders. I hope you have had a wonderful weekend, so you are ready to begin a new week with a vigor. As usual, we start the day with a video review of the Asian session. Stock markets in the Asia-Pacific region kicked off the week with the losses, following a drop on Wall Street last Friday. Now, investors are closely monitoring the news on the coronavirus spread in China. They also focus their attention on the news about the prospects of rate increases by the world's largest central banks, as well as earnings reports. Last Friday, the US stock market performed a sharp drop, as it had already done many times throughout the week. The main bearish factors remained the same: tense geopolitical situation, galloping inflation, and the Fed's moves to curb it. In order to cap inflation that has already hit a 4-decade high, the regulator may hike the rate by 50 basis points at its May meeting. Fed Chair Jerome Powell admitted such a likelihood speaking at the IMF meeting last Thursday. Of course, the statement did not catch off guard investors. They have already heard it in speeches of other FOMC members. However, the fact is that the May meeting is just around the corner, which makes traders extremely nervous. Given that the US market has closed in the red for the third week in a row, speculators continue to get rid of risky assets. Last Friday, the S&P 500 and Nasdaq indexes looked the worst day since March, and the Dow Jones saw the worst day since October 2020. In today's Asian session, US stock futures keep falling. Investors are bracing for the busiest week as the earnings season is in a full swing. This week, Apple, Amazon, Microsoft, Alphabet, Meta Platforms, and others are scheduled to unveil their quarterly results. The US dollar is again in momentum as market participants are widely expecting a tougher stance on monetary policy by the Fed. What's more, the watchdog is likely to tighten monetary policy at a faster pace compared to other central banks. The yield of 10-year US government bonds soared amid Jerome Powell's speech. Naturally, the greenback took advantage of a rally in the bond market as well. So in the Asian session, the greenback maintains its Friday's bull run, gradually rising to new highs. The US dollar index, which gauges the strength of the greenback against a basket of 6 major rivals, has already increased by 0.2% to the level of 101.49. It's quite curious that the euro has been unable to climb versus the US currency after the end of France's presidential election. The euro-dollar pair remains in the downward channel. For this reason, the US dollar index is likely to be moving in the intraday range of 101.04 and 101.74. Meanwhile, the dollar-yen pair seems to have consolidated at 128.09, the level of Friday's close. The downtrend still prevails. The US dollar approached a 20-year high versus the yen. Today, the pair is fluctuating in the price corridor of 127.86 and 128.86. The yen remains weak as the Fed is shifting towards a more aggressive stance on monetary policy, while the Bank of Japan maintains ultra-low interest rates. Besides, the Japanese regulator continues to pump up liquidity in the market by buying up 10-year government bonds. The gradual rise in the yen today may be associated with the IMF statements and some media reports. The bank pointed out that the weak yen increases import prices and undermines household spending. It poses many risks for the Japanese economy, which has been severely hit by the pandemic. Japanese broadcaster CBS reported on Friday that Japan and the US probably discussed the idea of coordinated currency intervention to stem further yen falls. Trading floors in Australia closed today on the occasion of Veterans Day. The risk of sentiment prevails, which is bearish for the Aussie. News from China is also rather disturbing. China The largest Australian trading partner is still unable to contain a new wave of the coronavirus. Authorities began locking down some other areas of Shanghai. New lockdowns may adversely affect Australian exports. A slowdown in China's economic expansion will inevitably lower demand for Australian commodities. If so, the Aussie is sure to weaken considerably. Apart from that, market participants in Australia are looking forward to two major events: the federal election in May and the Reserve Bank of Australia meeting scheduled for June. Traders believe that the Reserve Bank of Australia may finally hike the key rate. Last week, the regulator already stated that weaker inflation and a pickup in wages growth have moved up the likely timing of a nation's first interest rate increase. The interest rate gap between the Fed and the Reserve Bank of Australia is widening. To this end, the Aussie dropped by 2.7% against the greenback in the last 2 weeks. However, the Aussie may regain ground after the release of the inflation report, which is on tap on Wednesday. Today, the Australian dollar drifted lower. At the moment of making material for this video, it was trading at 0.7185. The AUD USD pair is moving within a downward channel between the support level of 0.7151 and the resistance level of 0.7262. The recovery is unlikely to occur in the near future, taking into account its 4-week decline. And that's all for now. Subscribe to InstaForex TV channel and stay up to date with the latest market news. Do not hesitate to ask any questions down below. Do not miss our next video review, and see you soon.